So today we're going to talk about alternative funding sources. Here at 10 Capital, we help startups and investors connect for funding. Looking forward to helping you guys raise funding if you need help with it. So the first form of funding is called equity funding. Equity funding is just one source in that you're giving ownership of the company away. And it's the most expensive form of funding there is because ownership of your business, when you sell it, will go for a tremendous price. And there are other sources of funding you may want to consider in addition to equity funding itself. The first is grants. Grants are typically provided by governments. The most popular one is the SBIR, Small Business Innovation Research Grant. It comes in 3 phases, 1, 2, and 3, and together you can get up to $1 million. The beauty of grant funding is that you don't have to pay it back. It's non-dilutive. It is not taking up any place on your cap table. And so it's just money that comes in and you can spend it. The issue is grants are typically one-time offers. They're not recurring, and so you must make good use of that money. It's best to use it for things that customers won't pay for, like filing patents and basic R&D. That's where grants really come in, and they do a great job in helping you get up and running. If you get too far along, you get too much revenue, you lose the right to go and pick up grant funding. Grants often have specific rules on how you can use it, and so you have to be careful on what you spend it on in that case. The second source is loans. Loans are debt instruments that must be paid. Startups can find it difficult to get a loan from a bank because you don't have revenue, and if you do anything, it's got a personal guarantee to it. So the most common loan startups get comes from the Small Business Administration, and it's just to be clear, it is personally guaranteed. Just to be clear, the IRS is the one that collects for the Small Business Administration loans, and so if you're taking out that loan, you will at some point need to pay it back. So it's a great way to raise money, but I think loans are a great way when you have revenue and the ability to pay it back. The next one is line of credit. And I bring this up because I think this is the most valuable tool you can get as a startup with revenue, because it instead of getting a loan, what you do is you go to your bank and say, I have cash flow needs. In some months I have, excuse me, 100K of revenue, I have 100K of expenses. And what I find is that in some months I have more revenue than expenses, others I have more expenses than revenue because the revenue is coming in at a different time that the expenses are going out. And so you go to your bank and line up a line of credit. So as money comes into your bank account, if it goes too far down, the bank will give you a loan. When the money comes back in and it goes above a certain threshold, the bank will take that out as payment for the loan, and it runs continuously. It's running in the background. You don't have to go get a loan for every single thing. And it's substantially cheaper than credit cards. Most people use credit cards to start their business. I recommend using a line of credit with your bank if you have a good standing with them because it's a lot cheaper. And it's a secure line of credit is backed by an asset. So it's something, car, house, or whatever that you can put up. But if you have a business that's up and running and just needs a little bit of cash flow management, it's a great way of actually getting that done. The next is crowdfunding. We have a lot of crowdfunding sources out there now, and it's a great way, for example, with Kickstarter, to pre-sell your product before you build it. A lot of great lessons learned that come out of it, and so it's a good way to raise some initial money for your product. There's also crowdfunding from non-accredited investors. That means anybody can invest. They don't have to be an accredited investor dominated by the SEC. And it's a great way to get funding for your startup in the early days. If you have a business that's consumer-facing or has a community appeal to it, you'll find crowdfunding is a great way to pick up some additional money. Then finally, there's crowdfunding from accredited investors. And it's just like raising money from angel groups and venture capitalists and others. The only difference is you're engaging with them on a platform online rather than in person or through a group. So it's great to work with crowdfunding, and it's something you should start to consider for your next raise as to how it fits in. Next source of funding is bootstrapping and barter. Bootstrapping is using your own funds and that of initial customers to launch your business. Investors find this is a great test to see how much skin in the game you are bringing to it in addition to sweat equity. Also, barter is a great way to get the cost down. When you are looking for a service, sometimes you can exchange your service for their service, and you can actually reduce the actual amount of cash that you need to send out to the other side. So I recommend you look at bartering in order to make your cash go further. Next is what I call anchor clients. And this is when you have perhaps a software or an app or something. What you can do instead of course, you want a recurring revenue model, you want a platform, you want many users on it. But what you can do is go to usually larger clients or customers and sell them a custom version of your product. And I'm talking about you're going to charge them $250,000 for it or $500,000 for a custom version of what you're building. And what you'll find is that some clients have very specific needs. They want their own tool, and they'll be glad to pay for it. And you get 3 or 4 of those 500K clients, you now have $1.5 million of revenue going into your business in order to build that platform. There are many SaaS companies that started as digital media agencies where they had a problem, they looked for a solution, couldn't find one, built their own, and then found other people were asking for it. And from there, it spun up into being a standard platform with a standard price and so forth. There was nothing custom about it. So consider using anchor clients if you want to actually get funding for your deal without having to raise all the money through angel investing, and have them pay for a custom version. The other beautiful thing about anchor clients, if you have 2 or 3 of them, is they'll tell you everything about the competition. They'll tell you exactly what they need. They'll give you data sets to put into it. And at the end, there'll be happy customers that will tell others, this group works great for us. And so it's a great way to raise some funding as well for your operations. The next is what I call consultation funding, and it's similar to anchor clients. Consultation funding is when you use consultation work to pay the bills and salaries while you're building out your product. If you have a customer that needs help with some technical aspect of their business, you can actually sell consultation services to them. I recommend selling it to customers you're going to deal with so you get to know them. They become future customers of your product, and you start to learn about the industry and what needs they have as all of that information feeds into your product at some point. But you're basically bringing them technical solutions that they need in order to solve their problem, and they'll pay you an ongoing fee for that. It does take time away from your product development. You won't be 100% on building your product up front, but if they pay the bills, then it's a great way to generate goodwill, networking, relationships in the industry, as well as learning more about the needs of what your target customer has in and around your solution as well. So think about consultation funding and think about what can you offer those customers that they might want to outsource some work to you in order to help you build your business. The next is incubators and accelerators. Accelerators and incubators provide startups with workspace, mentorship, and other things, and they also offer cash to help start the business. And accelerators sometimes provide physical locations, which can be helpful, as well as some initial money, which can go to pay things like intellectual property filings and get some initial legal filings done and so forth. So what you may want to think about is using an incubator and accelerator for a little bit of your early stage funding. My recommendation in working with them is sit down and figure out what you need for your business, not what they offer, but what you need, and then go in looking for how they're going to help you with that. They often take a piece of equity and they offer you a little bit of money, but the question is, are we spending our time wisely? And you want to work with people that are going to be helping you with that process itself. So those are some of the key elements for raising funding. And so wanted to see if you guys have any questions out there. Let's open up the chat box and see what we have here as well. So we have a couple of questions. So we did have a change here at the beginning of the session to restart the slides. We had new people come in, had a little bit of a glitch, but we're past that now. So if you have any other questions, go ahead and put them in the chat box, and glad to answer it as well. If you are interested in raising funding, set up a time to talk with us. We'll be glad to talk with you about how to get ready for funding, as well as how to meet investors and if fundraising is the right time for you. We get asked a lot of questions about valuations, deal structuring, negotiations, so happy to share that with everybody. So if you're a pre-seed company, what is the best source of funding? Grant funding is one of the best sources out there. If you have grants, you can actually get up and running and start to apply the money to the very early part of your business. Consultation funding would be a good one as well. And by that, I mean you find a target customer, go in, figure out what help they need. Maybe they need some outsourced IT, or they need some data analytics, or they need some element to help their business. And you sign up as a consultant with them. And so now you have a daily communication with your target customer, and you're learning what their needs are. You're building a relationship. And at some point, you're going to be moving into a mode of actually providing a technical solution, or actually having them pay as an anchor client for your technical solution. So you're getting in there further and faster with the industry. There's nothing like living with your customer, because you learn very quickly what they will pay for and what they will not. So how long is the typical fundraise process? Typically, my rule is for every $1 million you want to raise, you need to spend 12 calendar months raising it. You'll spend the first month or two getting your documents ready, getting your fundraise campaign put together, and then you have to go out and start contacting investors. It takes a period of time to go through and meet investors, pitch them, educate them about the deal, get them warmed up. They need to start seeing traction. They need to start seeing movement at some point. And if you're raising $1 million, it'll take you 1 year to do it. If you're raising $250,000, $500,000, that's about half the year as well. Since the next question is, how has fundraising changed with COVID? So in the first 4 weeks of COVID back in March and April, what we found is that investors were offline working on their current portfolio companies, trying to get them PPP money, trying to triage them, expediting follow-on funding. I was going to give you that money in 6 months. I'm going to give it to you now because you need it. And then they were, for those who weren't going to make it, they're figuring out a closeout plan. After those 4 weeks, investors were, those who had funds raised already, in particular venture capital, were out doing business as always. There was about 25% of the angel investors and family offices that were distracted by the stock market, not knowing which way it was going to go. And then after that, the market recovered, and so investors are pretty much back making investments. But the thing that's changed is they ask for how you're doing in the COVID economy, how you're doing in this COVID environment. Are you able to grow your business? Are your customers able to continue using your service? And what they're trying to figure out is, are you COVID proof? Is your business going to do well? If it does well now, it'll do even better in 6 months or a year when we get beyond COVID. So you have to be very good to hit the, make sure you hit that mark with, we are doing well in this COVID economy and we're going to do even better later, because that's the biggest change in investors' thesis, is that they want to know that this new normal is something that your company is well positioned for. So are there any other questions at this point from you guys? Appreciate your staying with us. And again, if you have any questions about fundraising, glad to help you. The other thing we offer is what's called Fundraise Prep Launch Program. So if you're raising funding or you plan to and you need help with documents or pitch decks or what have you, at no cost, join our Fundraise Launch Program. We have e-guides, we have training sessions to take you through and help you figure out how to position your deal, how to put the decks together, etc. So what we'll do is give you that at no charge if you're interested. So the next question is, does TIN raise funding for startups? And so we do. We actually help with fundraising. We have a program where we engage our network of 12,000 investors. And what we do is take your deal, your pitch deck, put in a warm introductory mailer, send it to our network. And those who express interest, we then do an update at every 2 to 3 weeks about how your business is doing. We educate the investor on your deal. We talk about the team, talk about the product, talk about the fundraise. And we then have webinars. We have different ways of engaging online the investor and the company together to figure out which investors want to move forward as well. So we've got a great program for that. So if you're interested in that, let us know. Glad to help you with that piece as well. The other thing we want to talk about is we have quite a few tools on the website. If If you go to our education page, we have a series of e-guides, and we have 4 calculators that you can go and you can actually check the valuation of your business. You can see if you're ready for venture funding. You can check to see if you're what the advantage of 10 is for your fundraise, how much you can save using our program itself. So if you like to check out those e-guides and run your deal through the calculators, I think you'll find a lot of new information. Last thing is we get into a lot of discussion for evaluations, and happy to help you with that through the calculators as well. We also have what's called the Startup Funding Espresso. If you're new to startup funding, it's a daily mailer that comes out that you can read or listen to a short topic on fundraising. In the time it takes to drink an espresso, you'll learn something about funding and fundraising, whether you're an investor or a company. And so check out the Startup Funding Espresso. Just drop us a note. We'll put you on the list, and you can try that out as well. So we also have a podcast program called Investor Connect. You go to investorconnect.org. You can listen to one of 400 interviews with startup investors and what they invest in. It's a great way to figure out what the investor world is all about. So if you're an investor, you can see what other people's investment thesis is. If you're a startup, you can see what investors are looking for in your deal. Are there any other questions? Well, if there aren't any further questions, I'd like to thank you guys for taking time to join us today. We'll record this and have this up on the website for you to review later if you need to, but by all means, drop us a line. Love to talk with you about your fundraise and how we can help, and which of these programs, Startup Funding Espresso, Fundraise Launch Program, or a campaign program with investors is the best fit for you. With that, we'll go ahead and close it out, and appreciate you guys taking time.